the beginning of next week. If not, the winner will know soon. But today's the last day to apply. Click the link and do it. And I'm going to play a quick video, and then we will have Chris Pulver on.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy Friday. What's happening out there? Crisis averted on my end. I locked myself out of my place this morning and called a realtor to get the lockbox unlocked. That was really dumb. I take the dog out every day around 6 a.m. my time, and for some reason, I just poked the button and then came back to the door and realized I didn't bring my keys. What a dummy. But anyway, got in and still got to the markets for opening bell and just went 2 for 2 on the day for SPX. Good stuff. I keep seeing Frank nailing these trades on the bull call spreads and the bear put spreads in the SPX. He's doing a great job grabbing those little tops and bottoms. So kudos to Frank. That's good stuff. So far for the week, I am 11 for 12 on these little SPX plays. It's been pretty solid. And we have some trades this week in my A1 Pulver Alert section. Let me review some of those with you this morning. I put on a fresh trade yesterday on RL. I think I'm going to put on this. This is a bit of a different play today, but I was going to put on an income trade today. Let me double check this because we did have a nice pop in earnings, or not earnings, non-farm payroll today. The market got all excited about this crazy awesome job report. You know, average hourly earnings revised up, beat forecast. Jobs revised up, beat forecast. Unemployment rate dropped from 4.3 to 4.2 to now 4.1. I do wonder if this is causing the Fed to now pivot and say, okay, inflation seems to be back on the table with what we should pay the most attention to. I also wonder with the yields jumping the way that they did this morning, if we will see the CME watch tool or the Fed watch tool, if the Fed is still going to be as dovish. I saw, let me see if I took a screenshot of this yesterday. The market essentially reduced its expectations by about 50 basis points yesterday. I think I have a screenshot of this. Let me see. Do I have a screenshot of this? Maybe. I think I have a screenshot of this right here. Where are you? Screenshot. Editor. This guy. So the futures applied 2024 to 2025 Fed outlook. This is their expected rates. So right here, this jump. This is the reduction. So the market was anticipating a crazy dovish Fed, and now the markets have switched back on that by a little bit out to, September of 2024. There's been a huge reaction here. And obviously yields have jumped a little bit. So it's going to be an interesting development as we get through earnings season. We have inflation data next week on Thursday for CPI. We've got an election coming up. So yeah, a lot of stuff is going to happen. I listened to an interesting podcast yesterday. The handle is excess returns. I've told Nick about this before. Usually it's a bunch of rotating guests. This one guy in particular I really like, and basically it's like we're in about a 75 to 80% probability bull market with just a massive downside risk. So he's like, I wouldn't be bearish going into this end of year. He's like, but I would just have that necessary protection just in case, because I mean, historically with election years, we average 21 to 22%. We're right there again at 18 to 19% for the year. And the Fed is cutting. There's trillions of dollars being thrown into the system. Global supply is up again for the M2. I don't think that's something you want to fight necessarily. We keep going back to the simple technicals of where are we right now? And we're really well supported. The 50, the 100, the 200 are still very easy levels to look at dynamic support. So if you're looking at any type of slingshot, I'd look for those levels to bounce. Okay. Markets are falling. I mean, probably because we gapped up by 0.8% and it's just looking to fade the gap. I mean, think about this. Are the markets, they're red today, but is it a surprise when the market gaps up by nearly 1% to just kind of fade a little bit? It wasn't enough to break all-time highs, right? The market was excited, but I mean, this is what price is doing live. It's like close yesterday, gap open, we're just fading the gap a little bit. So what I mean, here's a spot to look for. If we come back in and we fill this gap, that could be a good spot to look for a bounce and just kind of see an intraday bounce at 567.50 on the SPY, maybe go back up to the midpoint or go back up to today's high at 572. So it was just a big gap, and it's always kind of disruptive when that happens. I look at my call option, put option volume sentiment. It's trading pretty much neck and neck at 33 and 31. So there's no clear winner today as far as direction. I think we're just going to stay somewhat contained. We might have a gap fill. I just wouldn't be surprised if the market doesn't break any lows. So I'm curious what Frank's got going on. If he's going to be doing like a bear call spread up here, or like another, if it bounces off the gap and trying to do like a bull put spread. But yeah, I think we're going to be somewhat contained. If we do take out this gap, this low to be tested. If we break the lows, that is one thing we could have some directional pushes to the downside. If we break the 565 lows, the next level would be that FOMC low around 561. And if we break the FOMC level, now we're talking at least a pushback into the 50 period or the 100 period before the market, catches a bid. So I wouldn't mind seeing a bit of a pullback. As we kind of illustrated yesterday, I am curious if the seesaw of the Fed has gone from all about inflation to then all about employment to now if one non-farm payroll is enough to say like, okay, it's all about inflation again. The longshoreman strike, I believe, is done right now, or at least they delayed it until January 2025. And I actually listened to a podcast on that last night, and I heard some staggering numbers. It was something where basically the import economy is being held hostage to the tune of $4 billion a day. You got longshoremen making $250,000 to $300,000 a year that are turning down a 50% pay raise. Like, that's kind of stubborn. If you're digging your heels in for, no, I don't want, I'm not happy with $300,000 a year. Okay. I mean, I don't know how many people you're going to feel bad for. And I talked about this briefly in an earlier session, automation's coming whether you like it or not. I mean, I hate to say it, but like in these industries where automation is going to be this big margin improvement and more productivity and displacing humans, it's going to happen. And it sucks, and nobody's going to like it. But you can either form a union and try to ask for a bunch of money, or you can embrace other means of being one that operates the machinery or figuring out how to program. I don't know. I mean, it's not easy. I obviously am not offering, this crazy solution, but it's coming regardless. And so to hold out and say, like, we're just going to try to get as much money as we can right now because we have an election. We know that the unions are going to be, more soft and prone to listen. I don't know. It's just the timing's weird, but it puts the inflation conversation right back in the hot zone because it's just like that. Like, imagine if this strike and this protest, if you will, if this strike went on for a month, how that would drag on the economy. It would. It's like all of a sudden we have scarcity, goods get more expensive, from the most basic necessities to whatever luxury items. I mean, all the stuff. But if it was a month and we're talking, 80 to $100 billion, like that's not nothing. So anyway, crazy stuff. But I think inflation is now back on the table. So it's going to be important to watch what happens next week. I'm still looking at that Trueflation reading, which I know is a third-party reading. But with that Trueflation reading, I have seen a dramatic bounce off the lows. And this is just my little forecast here. But when we print for our CPI on Thursday, remember that our previous print was 2.5 year over year, right? 2.5 year over year. And if we print lower, everyone might celebrate that in the near term. And everyone might ignore what we print in November and December. But if this is the bottom and we go from, let's say, a 2.5 to like a 2.3, and everyone's all excited that inflation keeps trending lower, this is something to watch by the end of the year, because if this stays at 2.3 for November, stays at 2.3 or goes up to 2.5 again, that's not the trend that we want to see. We don't want to see a decent trend to the downside. After we went sideways for 12 months, we're finally trending lower. If this goes sideways again or goes up, that's not a good thing. You know, is inflation going to cripple the economy? Not at 2.5 to 3%. No, it's truly not. But it's not a good thing either, because what does it actually take to all of a sudden start seeing inflation back above 3%? Maybe another strike in January by the longshoremen. Maybe higher oil prices with more conflict in the Middle East, right? I don't know. So I just think inflation is now more the focus, that the labor market seems to be better. And today was a big sign of that. And the market's like, okay, I think we're okay. You know, but inflation data is just there. That's all. So long story short, let me get into the Discord, the alert section. Let's check out what I think I put on some fresh trades. I put on a credit spread yesterday on RL. Added some levels on BA for Boeing. I did a credit spread as well as some dollar cost averaging. Nike was an earnings play this week for profit. We're going to have some more earnings plays coming in the next few weeks, so stay tuned for that for the Pulver alerts. NVIDIA, I ended up taking a small loss on. Micron, I needed a day extra on that piece of crap. I took a small loss on that one. Alibaba and Baidu, these are looking pretty good. China stocks are up again today. Index-wise, this week's been pretty decent. I canceled this trade yesterday. Those broken wing butterflies didn't fill, so I canceled that one. So anyway, plenty of trades ahead. I took some profit. I think my Aussie New Zealand hit my profit target. Yay! I didn't even get stopped out. It actually hit my profit target. No, it didn't hit my stop loss. Son of a gun. All right. Anyway, I got locked in for about 57 pips on that Aussie New Zealand. That was a winner in my Forex trade section. Moved the stop loss to lock in 57 pips, and it looks like I got knocked out at that 57 pip. Yeah, I got hit at 57. It did end up hitting my profit target. You can see my shaded area there. It was a 110.50, and the high is, I take that back, 110.49.8. So anyway, got knocked out with a 57 pips profit, which is fine. All right, let's talk shop. Let's take some requests. What do you like? I want to look at a trade here really quickly. So we're trading at 877 on Walgreens. This stock is clearly garbage, but I've got a way to trade this for next week that might actually be kind of nice. It's going to take some capital to do it, but let me see what this looks like. Not for today, because this is going to be, yeah, I'm going to have to go to next Friday. So if I go to next Friday, which is the 11th, what I'm looking at here is we're trading at 876. If I go 850, so I'd have to do this. If I buy the shares at 850, okay, if I buy the shares at 850, 8.50, and I sell against that a 43-cent covered call at $8.50, my break even is 808. Okay. If price stays above 850 by next Friday, I get the stock called away at 850, and I can make 42 cents a contract. Now, I'm thinking of doing this, buying 500 shares or 1,000 shares. So I can spend, $4,000, $8,000 to do it, but I can generate $200 to $400 of income by next week as long as price stays above $8.50. Now, it also would let me quickly repair the stock. I mean, we've been beat up pretty badly. The low here is around 823. My break even would be 808. I can just add another couple of covered calls. So I'm going to take an income trade right now. And basically, it's a unique way to do this where I'm getting enough premium on the covered call to make it worth my while. So I'm going to buy the shares. Actually, I did the math wrong. My fault. Never mind. Let me do this again. If I buy the shares at 878 minus 843, my break even is 835. I get it called away at 850. That's a little bit less attractive to make $150 on 1,000 shares. Now, having a break even of 835 is okay. The lows that we saw recently were 820. That should be fairly easy to repair. We do have I wish it didn't touch the 200 right there, because otherwise this would be crazy overstretched. But it did tap that 200 EMA. So we've gone about 452 bars, but this last touch here, we've gone less. I just want to see, can we have a pullback into the 50? I'm trying to get this trade in prior to earnings, which we do have earnings on the 15th. So if I do take the trade, I'm trying to get out of it for earnings. Let me think about this. If I wanted to get a little bit more premium, here's one thing I could also do. If I go to the 18th and it incorporates earnings, I could buy the shares at 8.75. Let me see what this looks like. If I buy the shares at 8.78 and I do an $8, let me take an $8 covered call for $1.13. My break even 7.65, get it called away 8. That's another 35 cents a contract. I think I'm going to do that. All right. I'm going to go bold here. I'm going to buy some Walgreens, and I'm going to do this on a couple of my margin accounts. So I've got this one, and this one with some decent buying power. And I'm going to throw out these are margin accounts too. So it's going to cost me maybe $4,000 to buy the shares. So here's what I'm going to do. I'm going to go ahead and buy the shares. So let's go long stock. 882. Let me see if I can get a little bit off that. So 881. See if I can buy 1,000 shares. 1,000 shares. It's going to set me back $1,300 in buying power. If this was a cash account, it's going to set me back $8,000. So I'm happy to use margin on this one. I'm going to go. All right, now we got 878. Okay, fine. Let's try to get 878 if I can for 1,000 shares. 878 not filling. 879. Filled at 879. Okay, so now I have some exposure here on Walgreens. I bought the shares at 879. I'm going into the options chain right now. I'm doing the October 18th. I'm going to sell an $8. Let me do the math here. If my break even is 8.79 and I sell a call for $1.12, that gives me a break even of 7.67, and I'm going to get it called away at $8. I'll make $33 a contract, which is $330 for 2 weeks out. Okay, so I'm going to go ahead and do that now. Let me see what the $1.35 looks like. If I do a 750, so if I go 8.79 minus $1.37, puts me at 742. Get it called away at 750. No thanks. All right, so I think the $8 one is my sweet spot. So I'm going to do $1.14, 10 contracts. So it's all covered. See if I can get $1.14. Let me see if I can get $1.15. Give me an extra penny, would ya? Build it a $1.15. All right, so here's the trade. I'm in with 1,000 shares. I'm covered at $8. I just got $1.15 on the premium. So what that trade looks like is 8.79 minus 1.15. My break even is 7.64. If it gets called away at $8, I make $360 bucks by the 18th. Okay, so I don't mind that trade. I'm going to do that on 2 more accounts. So same thing here. Go long the stock. 8.79. Actually, let's change this account. Let's go long the stock. 1,000 shares. 8.79, hopefully. Not filling. Try to get 880. Looks like 881. Okay, and then I'm going to sell against that. The October 18th, $8, get $1.15 for that now. Let me see if I get $1.16 for the 10 contracts. $1.16, survey says, filled. Okay, so I'm going to add that in. This is going to be a stock options trade. I'm going to add this into my Discord. So the A1 Trading Chris's trade section. This is going to be WBA income play, buy shares at, and you don't have to do it with 1,000 shares. Obviously, you can do this with 100 shares, 200 shares. If you do it for 100 shares, you're going to make about $330, $340 on the trade, or I'm sorry, $33 to $34 on the trade. If you do it for 500 shares, you're going to be making like 150 bucks or so. So buy shares at 8.80, sell $8 call for $1.15 credit. So 8.80 ownership minus 1.15 credit gives me a break even. I'm typing this out in Discord as I'm doing it here. So I'm doing the 880, oops, 8.80 minus $1.15 is 765. Break even 765. If price stays greater than $8 by 10/18 expiration, I generate 35 cents per contract profit. 1,000 shares equals $350. Okay, so all I need price to do is stay above, and I'm just going to go ahead and move this chart alarm down to $8. If we stay above $8, then I generate the income. If we pop up here to earnings, I'm still getting it called away $8, so I'm not increasing my profit side, but I'm also lowering the cost basis so I can still kind of repair the stock overall if needed. I don't want to. I just wanted to get called away hopefully in a couple weeks, and earnings pops up and gives us a chance to make a few bucks. Okay, so if you did, let's say $35 on 100 shares, you just do the math from there. Do the math based on number of shares. Okay. So that's for protection. Let me move that back to $8. That's for protection. And then I'll get rid of these lines, add in the stock, see if I can just keep it at $8. So if we stay at $8, my break even is around 760, so it's pretty tight there. And then, upside potential, I'm obviously looking for a gap fill and come back to like the 50 moving average or something like that if we're overextended. But that's the trade. So buy shares at 8.80, sell call at $8 for $1.15 credit. Break even is 7.65. If called away, net 35 cents per share. So that's the trade. This is the screenshot. Post this in Discord, and off we go. Okay. So there's that. And I was actually looking at a couple other plays to do this on. Walgreens was not my first choice, but actually the numbers did make some sense. So I was like, all right, I'll take a stab at it. Plus, it's pretty beat up. I hope that we do have like more upside here. I do have some other accounts that own Walgreens for the dividend. It's a ridiculous dividend, like 11%. But I just want to see if price will just bounce a little bit back into the gap fill around $12 or so. The other one I was looking at, you can do this type of strategy on like high premium stocks. MSTR was the first one that came to mind. So as an example, this one, you could do this one for like 100, 100 shares, but it's obviously more expensive at $100 and some dollars. So what I was going to take a look at today with is doing some that long put that I have in there is for previous ownership. That's out to January 2025. Yep. If I do, let me see if I can get an Ivy rank here. I'm going to pull a little Ivy rank from a Tasty's watch list. So American Airlines, 110 AAL, FXI, not bad. I'm still, these are crazy IVRs for those China stocks. China's up a little bit today. I want to take a quick peek at those. AAL. I saw that JetBlue had a big old rip today. I hope it's going to stay. What do we have here? American Airlines Group has maintained a hold. American Airlines maintained a hold. Beat earnings. Why this should be on your radar. Okay. I had JetBlue get a big pop to the upside today. It's JBLU. Look at this bad boy rip into the upside. This could be fun. I'm up like $800 today on JetBlue. I've been holding this thing for a while. I bought this thing essentially at COVID lows. Once we came in here towards like $6 or $7, did a couple of covered calls. My ownership is right around like $6. We had lows at 348, which obviously didn't feel good. I'm like, great, JetBlue is going to go to freaking zero, or it's going to be a merger and something in the airline industry. But JetBlue is kind of a higher quality provider, but nobody really hears about it. I'm shocked to see their stock is so dirt cheap. Was JetBlue and Spirit the merger that kept getting shot down over and over again? Like Spirit and JetBlue both, like they just squashed the merger. And then LUV had a rough go. So I mean, we're still trading off of. This is crazy. Airlines are trading at COVID lows. It's kind of nuts. But they're very cyclical, and they're also terribly inefficient. So, I mean, if I'm going to invest in an airline, I mean, it's basically a SkyWest situation. I like SkyWest. Man, I could have bought a dip there at 64, son of a gun. But Delta is the one that I probably focus the most on. I mean, Delta just financially is just way better off than other airlines. I just don't like buying it at the highs. I'm looking to see if Delta will cyclically get back down to like the $30 zone. And if that's the case, I certainly would scoop up some Delta. But anyway, I'm in JetBlue. I've been holding it. I'm not doing anything with it, but I just had a chart alarm go off today, so I thought that was a nice little pop to the upside. I do want to take a quick peek at the China markets really quickly. 22,736 on the Hang Seng Index. We are up to some fresh highs again this morning. Alibaba, we had a gap higher. It's red on the day. We didn't break highs yet, but another push to 114. We're up at 1.43%. Baidu, not quite at the highs. This one had a big snap. FXI also gapped higher at fresh highs. KWeb just shy of the highs. MCHI is basically the mixy, is what they call, or the mixy, higher highs, but I'm not doing anything with this one. It's already hit my measured move here to get back to kind of the center high. If this is a double bottom, this is what I'm still looking at. The upside potential here for at least the next like maybe 1 to 3 months is if we break this high and this is a double bottom, there's room to keep going. So I'm not trying to get in the way of a lot of these instruments that I'm in. I'm just trying to start looking to protect my profits at some point. JD is up to some fresh highs today, so that's pretty good. In fact, let me take a look. JD, is this something I want to protect? Let me see what their fair market value is. Take a quick peek here at JD.com. Fair market value, I think, is in the 60s. Yep, we're trading at 46.80. I've got a decent chunk of profit already running on JD, so let me have a look. I might be interested in taking some profit. Right now, I'm up around $13,700. I've got open P&L at 6,000. I wouldn't mind protecting it. I know there's still some upside. This one I've seen on Michael Burry's radar for quite a while. I just don't really want to. I don't know. I don't really want a violent pullback. That's all. I mean, we're on the right-hand side of the trend line. Technically, this is looking pretty good. I don't think the animal spirits get lifted for 2 weeks and then squash. I think there's more to it. Yeah, I think there's more to it. So I'm just trying not to get super greedy. That's all. I mean, if we get profits back into like the 50 area, I'm okay with that. If I take off my JD trades right now, I could take off the own shares. The rest of it are all puts that I wouldn't mind just reestablishing positions on. I think, do I want to take some profit? I can always move a stop loss. I think it's going to be pretty volatile. I don't want to kick myself for this thing going up to, $60 to $70. But I can always get back in if I still like it. I don't know if I really want to. So that's just a massive bump to the upside. And if we are going to pull back at all, then obviously I'm going to sacrifice some profit, but I can always look to reestablish positions, do some more option trading. So I think I'm going to do this. That's a pretty big rip to the upside. We have gone up in about 2 weeks, about 83%. I'm okay with that. I think I'm just going to take the profit. I'm going to take the profit. I'm going to close out my position. So I'm closing the shares out, but I'm going to keep the 27, 25, 23, 20, and 17, 50, and 15s. These are all puts. So I'm sitting here like layered in with like cash secured puts, but we're $20 above price now. So the odds of this getting filled, I mean, look at my probability of profits, 86, 88, 89, 98%. I mean, the odds of coming back to hit those put levels are pretty slim. And even if they do get hit, I wouldn't mind taking shares cheaper, which I'm happy to do. So I'll let that continue to decay for more profit. But I think right now being up about $6,000, I'm going to go ahead and take the profit. That'll be another leg to my profits this year, up $13,700. I think it's good enough for me. So I'm going to start closing out my shares. So 46.92. See if I can get a couple extra pennies here. Guess not. Oh, it filled me at 93. Okay, good. So that's zeroed out. 46.92. Got a couple extra pennies. I don't mind that. Close out 46.93 for. Not filling there. Try to get 93. Filled at 93. Close. Oh, 46.90. Nope. 46.90. Hey, that's actually a pretty good fill. 46.90. Okay. 46.93. Filled at 93. Yeah, I'll take it. And then last one here. Close 93. Filled at 94. Okay, that's a pretty good run. We did buy some shares together. I know that's in this alert section somewhere. I'm going to update that. So I bought some shares of JD at 32.50. We actually bought that during a live session. So I'm going to add that into my stock and options update. So update JD owned shares. It was buy. I bought $1,500. So I did a $1,500 allocation at 32.50 price. Closing now at, closing now at 46.90 to 46.94. Protecting profit. We'll consider using options to re-enter on pullbacks. Okay, so basically what I'm going to look for is this. We have this big rip. It's up 80+%. I'm not saying that we can't go higher, and it might, and I'll sit here and complain about it, which is what you do when you're like, oh, I should have done this. But the reality is if we get a pullback here, if we get a pullback to the 23 to 38% zone, I might look at another short-term buy opportunity there. Or I'll just do a quick credit spread and just see if I can generate the income. And I'm in these China plays for the next 30 to 90 days. That's about it. I really don't have much of a timeline past the new year. Once we get into Q1 of next year, I'm not that interested. So my hope is that these stocks continue to rip higher and there's more profits to come, or at least just, if we get a pullback and another push higher, if we get fresh highs, I'm going to start looking to take some profit. A lot of my expirations are, on my naked puts or on my cash secured puts or on my credit spreads throughout the November, throughout the December, and that's pretty much it. So that's my participation. I'm not looking at anything long-term here. This trade I've been sitting in for a year. And actually, and truly, I was wondering this year, like, will China lift animal spirits? And to the degree at which they did, and the velocity of these stocks have just ripped in the last couple of weeks, it is more than surprising and more than satisfying to see, like, holy crap. You wait for a year and all of a sudden you get like a full-on, ballistic move, and that's not a bad thing. But I also know that this isn't typical stock behavior either. So when I have a chance to look at something, I'm like, I'm up a decent amount. I'm going to take some profit. The reason I'm not getting out of the other stocks yet is because I think there's still more upside on a stock like Alibaba and Baidu, and those are coming. I'm looking at those at maybe some profit protections as well. Okay. Lee's asking if I'm trading Indian stocks. No, I'm not trading Indian stocks. My trade for RL, no, it didn't fill. That was way out of the money yesterday. So I put that trade in. That price has to come down to RL, and it has not. So it has to drop. We've got to drop a decent amount for that to get filled. This is a 165 by 160. Price is going to have to come down to me in order for me to get filled at that trade. That credit spread is going to be at a support level. So I'm just going to let it sit there, good till canceled. And if RL goes higher, it's just not going to get filled, which is no big deal. Okay. All right. I think I want to look at one other stock, and I just want to double check my calendar today. I know I'm good for, I think I'm good until like 11:10 or 11:15 today. Let me double check. So open up my Gmail, double check my schedule. Okay, yep. So I'm good until 11:15. Cool. All right. So Lee, Indian stocks, indexes. I mean, if you look at India, what's their primary ETF? Like, what's the SPY equivalent of India? I know you got the Nifty 50. There's another one in there somewhere. I just don't remember what it is. I know India stocks and India stock market has killed it this year. But I mean, there's probably going to be a bit of a dip or reversion. I could see, China coming out of the doldrums, and the sleeping dragon's been awoken and lifting animal spirits and trying to breathe some fire into the market a little bit. Obviously, using some analogies there that are pretty fitting, but it's about time. And I think they just really established it's very similar to like the Fed offering to put in their, they're putting in a floor. And that's what the China economy just did. It's like the government just put in a floor. They're supporting the stock market, not necessarily supporting the property market. I listened to a really interesting podcast on what they do is they basically they call the herd, they gut the property market, they try to deleverage the economy, and this is called ventilation. This is just one of the experts was given this a phrase. He's like they just release all the hot air, but then they need to like pump it back up. And so this is one of those kind of cycles where they're pumping it, they're ventilating it, and then they'll go back and they'll deleverage somewhere else and they'll put their attention elsewhere. But for right now, it seems to be doing the job where the markets got really excited all of a sudden. And obviously, I like it for right now. Okay, I see some requests for the currency markets. Yep, DXY, gold, silver. I want to take a look at those. For the the S&P today, we're still jumping around here in the SPY. I'm looking at some gamma levels. I mean, we might fill the gap today around 567. It's kind of equidistant where I don't know what price is going to do. It could just stay pretty contained in here. If we do end up filling this gap and going lower, that'd be a pretty big move. I mean, if we got all the way up here to 572 and drop back down to 565, that's a $7 move on the SPY. That would be a pretty big move. So I again, I don't know, but are we going to just come back in and fill this gap and then trade back into the midpoint, maybe trade back up to the highs and just kind of have a day like that? It's very possible we have a range day today, and there's no real direction for the week. This week has been very quiet, right? We didn't take out the high from the 30th of September, that Q4 move. We didn't take out the high from October 1st. We're still below that. And I mean, it's been profit has actually been every day this week, which is kind of nice. Not too bad. But are we rolling over on the US market? Maybe. Okay. We still have I mean, I drew these lines on my charts, like these horizontal lines right here. I drew them weeks ago. This was right after the FOMC. So I drew the low, drew the high, and this market is still responding to them. I expect the melt up is still very much in the cards. Path of least resistance is in the cards. Some type of outlier event would be what does the damage. I don't know if it's going to happen. Something tells me that we just deal with this. It's going to be this like controlled little sideways area and look for a higher low. Okay. Look for higher highs for right now. Nothing tells me otherwise, especially with a somewhat accommodative Fed, unless their minutes next week on Wednesday change the tone, which I don't think that's going to happen. The Fed's likely going to cut rates in November. What the change was for November, December is I don't think the market's looking for a 50 basis points cut any further. So if we go to November, the highest probability now is it's just going to be a 25 basis points cut, and December, high probability that's a 25 basis points cut. So it was last week that this was up. The market was expecting a 50 basis points cut in December. That is, I'm not saying it's off the table, but it's a way lower probability now. Okay. So the Fed, if they're going to cut November, December, and going into 2025, I don't know how much the Fed's going to cut. So again, this is a good time to be bullish. There's not a lot of disruption to this bull market right now to the end of the year. The election, if it's kind of a non-event, we don't have one Republican sweep or Democrat sweep. That's the only thing I'm worried about from the election side. Otherwise, it's business as usual. Markets like gridlock. The Fed is accommodated with cutting rates for the rest of the year. Stock market seasonality through October is usually a pullback or a pause, and then a rip. It's called Uptober for a reason. And then November, December, it's low volume, and it's just running with option flows. And those are typically bullish. So I think we're going to go higher. I'm planning for us to go higher. I'm positioning for us to go higher, but I'm not crazy aggressive. I'm just not trying to get in the way. I'm not calling tops. I'm not over hedging. I'm just letting the market do its thing. I think we're just going to drift. Okay. I really don't think that the market is that anxious about the election. I really don't. I think the bigger trouble with the election would be if we have a Republican sweep where it's House, Senate, and President all Republican, or House, Senate, President all Democrat. The odds of that happening are pretty low, and the market tends to operate pretty well in gridlock. Either way, there's going to be fiscal spending. Either way, the government's going to just run our deficit into oblivion, and at some point that's going to be a problem. I think right now the Fed is pivoting back to inflation because of employment stabilizing just by one little rate cut in September, and all of a sudden we have one of the best look at the non-farm number. That non-farm number was the best one that we have seen in how long? Look at the calendar here. I mean, the last time we had a print of 250, we had to go back to April of this year. It was the last time we had some really steady numbers to that degree. So June 7th was 272, but 303 was the last big print. But these are the worst. These revisions have been really, really rough for the jobs market. And that's also why it started to get into that delicate area of like, oh my gosh, the Somro triggered and the employment situation in the U.S. is turning sour. I mean, yeah, the revisions have been terrible. So this revision was a breath of fresh air. We beat, plus we had higher average earnings, and then the unemployment rate dropped to 4.1. So that is at least showing a bit of stability there. Now, the Fed did say on September 18th that they would anticipate the employment rate goes up to 4.4 by the end of the year. So what's that look like for the job situation? I don't know. But anyway, I think inflation is going to be the focus. All right. Talk about a couple other things. Somebody asked about Aussie dollar. Somebody asked about the dollar index. Let's take a look at some currencies. Okay. Aussie dollar, it's in a range. This is a sell trade, in my opinion, at resistance. The dollar index is still making the rip, right? Look at this dollar index. I told you not to be taken in by the bear trap. I obviously didn't say like buy the dollar. I don't want to buy the dollar. Okay. If the dollar's up, I'm making money elsewhere, and I'm not trading currencies right now. Not to this degree. My currencies are still Swiss pairs. That's my investment in the Forex market. I'm taking a couple stabs on some swing trades like I did this week on the Aussie New Zealand. That was a clean trade. But this dollar is 1, 2, 3, 4, 5 days to the upside. I'm a little suspicious of that, simply because the stock market, it's not like we rolled over and we're having like risk off trading, but non-farm payroll today, the dollar liked it. I mean, take a look at currency strength today. Okay. So the non-farm payroll reaction, we had CAD up, dollar up, pound up, yen way down. Yen was strongest coming into the morning, and now it's the weakest. New Zealand and Swiss also right there, but we've got dollar, pound, and CAD on top today. But the dollar was baseline and then made a big jump during non-farm. So technically speaking, the dollar is just in a pullback phase. And I don't think the dollar is going all the way back up to these 106, 107 highs. I don't think that's happening. Now, because we have support in here, could we see a low to high, higher low to higher high? Yes. We could totally see that move. But if we come back into the midpoint of this larger range, I'm not saying I'm calling the top on the dollar there, but if this starts to turn with resistance, that to me would be a good spot for the market, stock market, to find a bottom, start to go higher, and the dollar finds a top, starts to go lower. So whether you want to trade the dollar or you want to trade the stock market, I think there's going to be a correlation with a weaker dollar, stronger stock market. So if we have this like little tiny pullback in the stock market, the dollar showing some signs of recovering right now. But if and when the dollar turns, I think that also gives us a turning point on the stock market. And then off we go for our late, Q4 flows to the end of the year. So that's the direction I'm looking for. Something can obviously disrupt that, but that's an outlier right now. I don't think it's the election. It could be Middle East stuff, but man, this market shrugs off so many things. I mean, we've been seeing a Middle East conflict for decades, literally, and now escalated tensions, yes, but it doesn't matter in the bigger picture. I mean, it matters with oil, but it doesn't matter in the bigger picture. Where if you're a long-term investor, these instruments are built to go higher. It's positive drift, and that's why they're there. Anyway, we take a look at gold, silver, oil today. So oil also continues to do pretty well. Up. I mean, that's a big recovery in oil from what we thought was, oh my gosh, Saudi Arabia is trying to take back market share. They're pushing oil down below $50. It's up 12.5%. CL, I want to take a look at this one on my trades because I do have some futures trades on CL. And right now, okay. So I have this is what I want to see. I want to see more, and the weekend coming is good because this decay on these $65 short puts. This is a put at 65 that I sold, and then I bought a hedge at 55 just in case. The hedge is essentially going to be worthless, but I want to see if this put will pay out because max credit here, and I went out to December, and that's a little bit longer than I want for this cycle. But this 0.03 with one contract and two contracts. Let me see if I just do it's a pairing here. So that trade similar. So I take away the hedge. I want to think what I'm looking at. Let me look at here. So 0.03 credit. It should be like it's a $300 income trade is what it is. So if it all settles in, it's a $300 income trade. If my sell put starts to show more value than the long put, and I'm up, I said this, so my max profit's around $300, and I'm seeing, let's say, $100 of profit, and I could get out of this now versus waiting to December, I will probably just take the profit. I'm not that interested in trying to hold this thing to December with that potential outlier of more volatility and some silly event. I got to go. All right.
Hey, Chris. Yep. We got Nick Phillips on next.
Cool.
So we'll be handing the show off to him. But
all right. Thanks, Chandler. Nick, have a great show. Good.
Yeah.
Happy Friday,
guys,
everybody.
Make sure to, if you're interested in what Chris is trading, because he trades pretty much anything I can think of.
It's true.
We've got the Pulver alerts where Chris shares his trades in our group. So if you're interested, the Pulver alerts, it's like a Discord expansion sort of. So I've got the link there. Make sure to go subscribe to Chris as well. He's on with us every single day. Oh,
and also, real quick before Nick comes on, earnings season is kicking off, so that Pulver alerts will be super active here the next 3-4 weeks as we get more and more earnings season trades that I'll be interested in. So it's going to be a variety of strategies. So make sure you can trade 2 legs at a time, 4 legs at a time. We're going to get creative, but earnings season usually is pretty profitable. So there you go.
All right. Sounds good. Well, Chris, I guess we'll see you next week.
All right. Sounds good, Chandler. Thanks. Take care, everybody.
Weekend. All right. See you. All right, guys, we're going to bring Nick into the show, and we'll see him right after this. Stay tuned.
We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Hello, hello, hello. Glad to be back. I have been on vacation for the last week, so I've not been able to jump onto the A1 show. Uh, but I'm excited to be back, excited to get going with you guys. As always, during my session of the show, please feel free to drop any questions that you have or any assets that you want me to analyze for you. Send them in the chat, and I will try to get to them at least towards the end of the call. So, just a quick little review for anybody that is what's up, Jacob? For anybody that is tuning in now, haven't been watching the earlier part of the show, I'm sure Chris and any of the other guests have gone over this, but we had a massive move to the upside on uh, NFP today. Jobs reports was huge. Let me just go here to my private community. We had 254,000 jobs created. We had an unemployment rate drop significantly lower to 4.1, and we had a decent monthly wage growth. Take this NFP report by itself, and it's very indicative of a very strong labor market. I think personally, I think we're gonna need more, um, more good data out of the labor side of things in order to solidify that we are in a strong labor environment as we were starting to cool and we were cooling significantly on the labor side of things. I don't know if one strong print is enough to truly change the overall sentiment about the labor market currently. I know that the market itself is reacting in an obviously very um, impactful way. We've got a new pricing for the target rate in November. Previously, most of the market was pricing in 50 basis points of cuts in November, and now that has shifted drastically due to this labor market print. Um, so, with that in mind, November very well may only see a 25 basis point cut. It's what the markets are expecting is kind of based on this labor market print, the outlook. But I don't think that one NFP print changes the longer term picture. If we zoom out to let's go March of next year, which is that's about what is that, 5 months, almost 6 months away. We're looking at m- most, how many cuts is this? 25, 50, 75, 100, like 100 basis points worth of cuts or more 6 months from now. So, one strong NFP print, not enough to truly change the next 12 to 18 months as far as monetary policy sentiment goes, but still a good enough opportunity for us in my private group to get a little scalp. We traded the pound out of this. This is GBP pound futures. I trade FOREX on the futures market. Spreads are lower, commissions are lower. The only thing I don't get access to is like the cross pairs. So I'm really only trading USD pairs. I don't get to trade any of this on the futures market, which is a little bit of a drawback, but I like the benefits I get in exchange for that. So we took a real quick scalp following this pullback. This is essentially how I trade a lot of these data prints. Now, granted, I had a tech issue. I would have loved to have been in here and I would have been out with literally less than a minute or two into the actual print. Um, but that didn't happen. So I waited for price to come back and into this area. Usually, what I do if I miss this initial drop, um, I'll identify where price during this drop sort of got stuck. I don't necessarily want to say stuck, there's a lot of activity. And the way that you can identify the activity is really based on wicks, right? So we have price wick down into here, closed here, wicked up, closed down, popped back up into this area. This is an area where price hung out for at least 5, 10, 15 seconds of price action was in this area right after the drop. Okay, cool. So I like to identify this as an area of, if it comes back here, I'll look for reasons to sell it from here. If not, I'll miss this trade. I was kind of a little bummed this morning because we had this leg pulled back and then started to fall. And I was like, oh man, I'm not going to get this. This leg pulled back, started to fall. It might go from here. I might miss this. But eventually we did pull back into here. And we got this nice little double top situation. I like seeing this. This bit of price action here was really important for me, where we started to create a little bit of structure towards the upside, and then we broke down below that structure. And once we got this nice engulfing here, I went ahead and sold it for a nice 1-to-1. I targeted a daily level. It's a real simple daily level. Again, a level where price seemed to have been stuck a little bit, and that was right here at this little area. Once we broke down below yesterday's low, I wanted to see us break down below yesterday's low, and then my next target was this little bit of price action in here, and then any targets beyond that was going to be this level here, but I didn't stay in that long. Now, moving forward, again, I don't want to continue to try to necessarily buy the dollar right now, which is what I'm doing when I'm selling the pound in this scenario, because a lot of the momentum's gone from this move. We could see during the rest of the day this fall off and tap back into these lows for sure. It could happen. But it could also just consolidate in this area, maybe consolidate here. So the move is gone for me as far as the ability to scalp it. But on a longer term basis, going back to the dollar, because when I trade pairs and I'm trading USD data, US data, I'm never taking a position on the Doxy, right? I'm always trading something like the pound against it, or the Australian dollar against it, or some other currency against it. But it sort of comes back to the Doxy positioning. And for me, this is something that I mentioned the last time I was on the show. I believe I mentioned this. I see us consolidating on the dollar, uh, bigger time frames until post-election. And what do I mean by consolidating? I mean, I don't see us breaking out of this area. Definitely not breaking out of this consolidation zone, which we've been stuck in since January of 2023. So almost 2 years of bouncing back and forth in this area. So definitely some consolidation there through the election. And then on a tighter frame, again, unless we get some significant fundamental changes, which this jobs report today could arguably be a significant change, arguably. But unless we get some, take that idea that the NFP print today was a significant change, take that idea, put it to the side for a second, because remember, this NFP print by itself might not be enough to significantly change sentiment. Unless something significantly changes, I could see us staying below these 103.5 levels. Ooh. And definitely below 104.5. And when I say definitely, this is obviously just my projection. through the election, which we're not that far from now. We're about a month out from the election. All of this price action where we hung out in this zone right here, August 19th to really October 2nd, this was over a month of price action just hanging out here. So again, we'll just pull this box over from here. I don't see us really moving out of this area. This is a pretty significant range as far as the amount of price action and the amount of opportunities that could exist here. But if you're trying to swing trade the dollar, I think until we get the election behind us, I don't really see any significant moves happening in either direction outside of this area, with maybe a little bit of room here, maybe a little bit of room there. But for the most part, I think we're stuck until we figure out who the next president is going to be, and then potentially we'll break out of these areas. Now, I've been saying it since we hit this area. I am looking for reasons to buy the dollar up. I'm certainly not targeting, these highs on a longer time frame, but I am looking for opportunities to buy the dollar. And some of that now has come into, fruition with the risk sentiment that we're seeing out of the Middle East, and this new jobs report. Really, the risk sentiment was the big sort of like, oh, okay, we might actually have some safe haven flows coming into the dollar. When the last FOMC, when we got a 50 basis point cut from the last FOMC, that was a bit more bullish in nature, I thought, than what the market really priced in over the weeks following. But I still think there's a bit of a delay here. That 50 basis point cut to me signaled that the Feds were a bit behind on monetary policy. And there's some argument and some debate on Twitter, on whether or not, maybe X, on whether or not the 50 basis point cut was actually politically motivated. Of course, we know the Feds say it's not. They reiterate that constantly, that any monetary policy decision is not politically motivated. There's discussion of whether or not the 50 basis point cut was. Looking at it from a politically biased view, I took it as they're cutting by 50 basis points. They're behind. They should have started cutting back in July. They haven't. Now they're playing catch up. The labor market might be in serious trouble, but today's labor market print challenges the trouble of the labor market situation. So we're in a very interesting place here, where over the next 12 to 18 months, we should see, theoretically, unless anything changes, we should see a significant reduction in the target range for the Fed. However, we also have reason for the dollar to go bullish when it comes to, all the potential war stuff occurring right now. So these sort of ideas met with the anticipation of the election. To me, it's going to be stalemate dollar with a bullish lean. So that's why I'm looking for reasons to sell other currencies against the dollar. All right, let's see. All right, let's answer some of these questions here. Wesley Otto said NZD USD. So when you guys ask me these questions, feel free to also clarify. Are you looking, do you want me to analyze it on a daily level, a 4 hour? Are you looking for swings, intraday opportunities, scalps, et cetera, et cetera? Let me double check my... Okay, so the RBNZ is set to cut by 50 basis points next week. Cool deal. I like knowing that when I'm looking at this. NZD has been something that I have all year basically been looking for selling opportunities for. We had a soft landing scenario out of, well, the mention of a soft landing scenario out of Governor Orr back in March. And then we had extra data that came in that sort of challenged some of those ideas over the summer. But you can see we started to peel to the downside right in March when we got some of those comments. That was challenged, peeled to the downside again, and then economic data came in and challenged a lot of this sentiment. But now the RBNZ is looking to start aggressively cutting. There's a couple potentials here. I could see a buy the rumor, sell the news play occurring moving into next week, meaning everybody's expecting the cuts. So maybe, I mean, we've started to aggressively price pretty well. Maybe a little bit more aggressive pricing, but then we actually get the cuts and boom, everybody liquidates their short positions and we see a bit of a rally out of the New Zealand dollar. Now, whether that's a sustained rally or not is going to be a completely different question. What I would anticipate if we get that scenario would be a bit of a head and shoulders scenario, a bit of a head and shoulders pattern, I should say. So we play in this zone until we get the RBNZ meeting, buy the rumor, sell the news, price rallies back to this 0.63 level, and then falls off from there. That would be ideal scenario number one for me. Scenario number two that I could see playing out, which I would not mind at all, would be a breakdown. Price just continues to break down. The buy the rumor, sell the news play does not come into effect at all. We get the cuts. Maybe we hang out here until the meeting happens. We get the cuts. We do a little retest and then continue to fall to the downside. So if you can't tell, my basic outlook for NZD USD, which is all the NZD futures is downside. It's just a matter of getting the right pricing and making sure that you don't just want to jump in selling here because, I'm saying it on the A1 show. You want to wait, let the fundamentals play out and the technicals play out to the point where you get a good entry opportunity. So NZD to the downside is my expectation with that. Could you help me with Euro USD? A lot of these currencies, I'm going to be looking for downside counter to the dollar. And another reason I'm looking for NZD sells, NZD is a risk asset. With the escalating tensions in the Middle East, I think we could see some potential downside out of the risk assets. Same thing with Euro. I consider Euro to be a bit more of a neutral currency when it comes to risk sentiment. I know that that's not textbook. Textbook, I believe, is that the Euro is a high beta currency. I have reasons I see it as more neutral, but I still do see how the euro behaves in a risk sentiment kind of way as a risk asset. So Euro USD would be another downside move for me. Again, it's just now that I have my bias formulated, it's about identifying a good technical entry. And let's see. Okay, so ideal pricing, if we get the opportunity, we may not. Ideal pricing for me would be selling from this area here. We may not get this opportunity. It may not come back here. for a while before it makes the move that I would ultimately want to see, which would be targeting in this bit of price action here. This is going to be target 1. And then target 2 will be the next level of support here. So this is going to be very similar to the NZD trade, where I would love to see a bit of a rally up into here. Nice rejection formation on maybe the 30, 15-minute charts, and then sell to target here and target 2. That would be ideal. The less than ideal scenario is going to be there's a secondary ideal opportunity which would exist right about here. It's not great. I don't love it by any means. Actually, okay, so this very similar to NZD USD, where we break down below this area significantly. I would like to see a good bit of displacement here between price and this level. So we can maybe pop down to here, then do a pullback, retest, rejection, and sell to target 1. The reason why I don't love this is because when you are trading from here, I think you run the risk of your stops getting hit. The risk of a stop loss is a little bit higher because you don't really have, as of now, we don't have great structure to base our stops on. So if we get this secondary scenario where price does fall and then rally back up and we get the retest and rejection, you really have 2 options, or I guess you have a million options, but the 2 options I would consider are lower time frame, we get a rejection formation here. Let's say that rejection formation looks something like a double top with a neckline break, and we enter here. Okay, option 1 on risk management for me would be stops above here. I would go low risk, 0.25% to a 0.1%. The other option is to place stops above some of these structure levels here. You don't necessarily, I wouldn't want to place it above these structural levels because this isn't really solid structure. This is a bit of more solid structure, kind of a flatter top, not so much of a trend line to the downside. So placing above this structure just makes your risk to reward a little bit crappier, about a 1-to-1 as opposed to a 1 to 8 almost, which I probably would not hold this long. I'd be happy with a 1-to-4, 1-to-5. If we make this bottom here and then pull back, this would be a new target for us. This bit of support. So that would put our risk reward at 1-to-6, 1-to-5.5, almost somewhere in there, which is that's a great risk to reward. Open this up to here and risk to reward goes down, but your odds of getting stopped out, I think, significantly lower. Price moving from this area to tap into this area, odds are much higher than price moving from here to tap all the way into here. So again, NZD sell or Euro sells is what I'm looking for. It's just a matter of getting the right pricing. And I say I'm looking for, I don't swing trade like this. I don't actually go to get some of these entries. I will just be scalping economic data. But it's I think if I was scalping, that's what I would be looking for. So entry here or entry here, targets being 109 to 107.5. What do I think about the dollar? I'm short on AUD USD. I mean, if you're short AUD USD, personally, I think it's a great position. It just depends on where you got short at. If you're getting short now, uh, it all depends. Where are your stops? Where are your targets? What are you aiming for? Why are you getting short? Personally, I think a short odd position right now is good because we're seeing some dollar strength and we're seeing the tensions out of the Middle East. Odd being a risk asset, downside potential based on war tensions. US odd being counter to the USD, US dollar, uh, FOMC projection or FOMC changes last month. I think there's some recessionary fears underlying there that have not come to fruition yet. If we get a really bad jobs report, the next jobs report, if we get a really bad jobs report, I think that will almost re-trigger some of the underlying recessionary fears that I think are present based on the FOMC. So I see a lot of downside potential in AUD USD. If you're in this and you're swing trading it, I think, great position. Really good positioning too on the daily, just from this area. So yeah, lots of AUD USD downside, BRS lovers, whoever that is. Let's see. Any more questions, guys? Should we sell USD JPY? Should we sell USD JPY? You need a little bit more detail for that question. The idea is to give yourself a really good thesis. Give yourself a really good idea behind every single trade. So some strangers on the internet telling you that you should or shouldn't buy something, maybe not a strong enough thesis, but if all of a sudden the feds come out and they say today that because of the massive jobs report, they're doing emergency cuts, blah, 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 absolutely sell the dollar all day long. I believe Japan has some issues right now, though. I need to refresh myself on the macros, the overall fundamentals of JPY. Personally, I would not be selling USD JPY. I would be looking for now. I say that, but I'm also going to turn around and say I would be looking for reasons to buy USD JPY. But I'll digress from that situation. I reviewed Euro and NZD, why I would want to sell those against the dollar. JPY selling it against the dollar right now, or I guess technically, yeah, it'd be buying UJ. I'm sorry, let me back up. You said selling UJ. So yes, it would essentially be, yeah, I'd be looking at the opposite. I'd be looking for reasons to buy UJ. But I honestly, I wouldn't mess with UJ right now because you have two safe havens in a time of potential war. It's going to make it a little bit messy trying to trade UJ. In my opinion, I would stick to risk assets against the dollar. So stick to the Australian dollar, New Zealand dollar, euro, pound, and the CAD. I'd be looking to sell all of those to some degree. Now, don't take that and just go selling all those currencies. Look for good opportunities, good targets. But yeah, I wouldn't be selling UJ. All right, let's see. BRS said, not sure the major support for AUD USD on 4-hour and daily chart. All right, let me go identify some major supports for you. I'm assuming these are some of you're aiming for these as targets for your sell position. I mean, previous resistance is always going to be a major, potentially major support. So we're there now on the daily. You're sort of in this zone. Maybe we'll pull this down to right here. So we're at a major support on the daily. Below that, let's drop to the 4-hour. I would say the next, there's kind of two pretty close levels here. I would say this bit of resistance, support, support. And then this level would be support, support, support. It's not, I don't want to say it's not incredible. Actually, it is incredibly strong because it's previous resistance here. Resistance, 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 support, support, support. So this is arguably the next strongest after this, I would say would be this 6.670 area. Sell on high risk assets. When I'm saying I'm looking for selling opportunities on the risk assets, it is because of the Middle East tensions. So you want to keep your finger on the pulse of that information. If all of a sudden everything dissipates tomorrow, Israel and Iran, like if they come to some sort of a peaceful agreement or things sort of start to fizzle out, like the markets will shake off a lot of stuff. Um, Currencies included, they had the potential to shake off a lot. You might see headlines that say stuff like a bombing's happened here, a bombing's happened there, blah, 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 blah. The markets can shake off some of that stuff. It really is going to need to be like massive escalations. Like, let's see, this most recent attack, um, Iran firing 200 ballistic missiles at Israel. That was a that was a pretty that was an escalation. This Iran poised to launch imminent ballistic missile attack on Israel. This is really what kicked off this most recent little bout of tensions, I would say. But I don't want to say it's fizzled out entirely, but it started to kind of fizzle out. The let's see, Biden, we're discussing Israel striking Iran oil facilities. They said that, when was that? Was that yesterday? It's trading risk sentiment can be a little funny from time to time because if you go look at something like this happened almost a year ago to the day, um, August or October 7th of 2023. This is where we had the Hamas and Israel most recent conflict, like really kicked off, was October 7th. Go look this up real quick. I think I'm running out of time here. Hamas-led attack on Israel, October 7th, 2023. This was like the big kickoff for the entire last year of Israel tensions. This is October 6th. This is a Friday. October 7th was a Saturday. Markets open on October 8th. And we saw just a massive rally for a couple weeks. And then following that, continued to rally to the upside. But this right here, I attribute a lot of this upside momentum to that, combined with some of the Fed talk of potentially lowering rates. But this big push to the upside I believe came out of that. So um, when it comes to selling some of this stuff, sorry, not selling it, following that, I should clarify, it started to fizzle out, but there were still attacks happening. There was still conflict happening. So the conflict never dissipated, but we see that after just a couple weeks of this sustained upside move, we go flat. Gold goes flat and then even falls off for a couple weeks. So this big upside move followed by a pull off, this was all the risk sentiment, I believe, pricing into the market. So the question now is, do we have a big enough risk catalyst to sell risk assets for a couple weeks following what day was this? 2 days ago, following a pretty massive escalation just 2 days ago. So Wednesday. I'm looking at Swiss franc. So Wednesday we have Iran attacking, and we fall into the downside on odd. I believe NZD is probably the same thing. CAD. Now this is where CAD is different. CAD is typically a risk asset, but because things are happening in the Middle East and Canada's main export is oil, or the basically the backbone of their economy is oil. You see CAD. I guess it actually did fall to the downside, but when we first had those tensions pop off, I thought I saw CAD move to the upside. Might have spoke a little too soon here. Where is Wednesdays? Let's see. Iran fires 200 ballistic missiles. Spelled missiles wrong. Tuesday night. So I don't remember exactly when this happened, but I remember looking at all the risk assets and going, okay, CAD is not behaving like a risk asset; it's behaving like a oil commodity or an oil-backed currency. So you have to be careful trading the CAD right now because of that. Oil obviously is a massive mover if you're looking at the war tensions in the Middle East right now, potential attacks on oil areas, oil supply areas. You'll see massive jumps to the upside in oil. Gold, I'm being careful about trading gold under normal circumstances. I want to buy gold when we have war tensions happening, but we're at all-time highs. Even if this thing continues to rally to the upside, I don't like buying at these levels. I don't like buying when we're at all-time highs. I may miss out on the future of gold if this thing just rallies for the next 6 months, a year, however long it continues to rally, because I don't like getting in at these prices. But for scalping opportunities, it's not bad if we get a major, massive headline, U.S. is sending troops or something. Boom, I would expect some immediate upside in gold. Jacob said, I have a heavy position on oil. Are you buying oil? Gotcha. So you're not shorting it. Okay. So yeah, I mean, it just depends on where you got in at, but I think being on the long side of oil right now is it's the safer bet. Now, positioning wise, we may see some relief uh, coming out of oil because we've had this massive push to the upside. I could see maybe if things start to fizzle out this weekend and next week, and the markets shift their focus from Israel and Iran, if it's not continuing to escalate and it's sort of fizzling out, like the tensions lessening, I could see some significant pullbacks on oil. So I would definitely make sure to stay tuned to your news terminals to kind of gauge that, and then gauge based on price action too. If we start to see significant breakdowns below some of these, I mean, you see a breakdown below this level, depending again on what time frame and what levels you're in at, you could see some significant pullbacks here. So just be mindful of that. I could, if there's no further escalations over the course of the next week to 2 weeks, I could see an oil pullback back to 72. I don't think that's outside of the range of possibilities at all. Yeah. I don't know if I would say it's done for like good, because you also have to think about, I believe it's just the northern hemisphere is moving into winter. So demand for oil is going to be up seasonally. Um, and there's the potential could continue, especially with US considering hitting oil. What is the exact headline that I shared here? Yeah, Biden is discussing US and Israel are considering striking Iran oil facilities. If that happens, your upside in oil is nowhere near done, in my opinion. And it also depends on your positioning. Again, I could see the tensions fizzling out, and with the tensions fizzling out, a little bit of a correction here, and then potentially seasonality demands pull back in, and we continue up in oil. But I think long oil is definitely the move now. It's just a matter of where you're in at, and where you're targeting. A lot of this stuff hinges on the tensions in the Middle East, I think. So if those continue to escalate, I think we're nowhere near done on the long side. All right, let's see. It's 11:50. I've gone way over my time. If you guys have any questions, feel free to hit me up. You can follow me on Instagram at official Nick Phillips. If you want to follow my, this is my brand, Victory Capital. My brand new Instagram for Victory Capital is acting as it's a news source. So my plan is to have some of the latest headlines. It's not going to be like immediate as fast as maybe like a Reuters terminal or something, but within 10 to 15 minutes of major headlines happening, I want to have them produced here to Victory Capital. I have a team that is working on this pretty much all day, every day, as of right now. So feel free to follow that. Stay up to date with the latest happenings in the this is really focused on Forex and futures. So you're not going to see a lot of crypto stuff. You're not going to see like a ton of focus on stocks, even though we are doing futures research. A lot of it is going to be on the macro side of things: labor data, inflation data, geopolitical tensions, et cetera, et cetera. So feel free to follow me there. And if you guys have any questions, hit me up. I will see you guys on the next one.
Thank you for watching today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. We're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. You can fill out an application with the link in the description below. That's all for today. Trade safe, and we'll see you tomorrow.